When it comes to the amount of money being made from mining Bitcoin, there has been quite a spike in the last few weeks. According to reports, the amount of money being mined has grown from around $1 million per month to $23 million. This is in part due to a new project being set up that uses 50 kilowatts of stranded energy to run its mining machines. ASIC mining rigs are more efficient than traditional GPUs. ASIC, Application-Specific Integrated Circuit, and GPU, Graphic Processing Unit, mining are two popular methods for earning crypto coins. The choice between the two is largely dependent on your mining objectives. ASICs are the most common type of mining rig. They are built with multiple chips on a circuit board that are then used to process complex algorithms. Usually, these chips are surrounded by a fan to cool them. Although these machines are efficient, they require a lot of power. Many ASICs draw around 800 watts. If your ASICs are older, it's worth buying an upgraded unit. When you compare the costs of using an ASIC versus a GPU, the GPU is usually cheaper. This is because it is more energy efficient and less expensive to run. However, it may be more costly to buy and build. You also need to purchase a CPU case and motherboard. You can find GPUs at any retailer. You can even pay for them with cash or credit card. Often, they come with a warranty of 3 years or more. You can also buy GPUs online. These are more customizable, and they can be shipped overnight. But you will have to pay for them up front. You may have to buy a power/heat wall to control the heat that these units produce. However, this isn't too expensive. GPUs are also more flexible. You can use them to mine a wide variety of coins. However, they may not be as profitable as ASICs. Also, there is a higher chance of these devices becoming non-functional. GPUs are also cheaper to own in the long run. They depreciate in value more quickly than ASICs. It's also easier to sell them. Lastly, they are easier to repair. Compared to GPUs, ASICs are more expensive and more difficult to maintain. They're often noisy and have fans that move quickly. Buying an ASIC is also expensive, and you may have to wait for customs and tax rates to settle. As a result, most ASIC miners have a length of between 11.8 and 30 inches, a width of between 5.9 and 7.8 inches, and weigh between 11 and 39 pounds. Bitcoin mining fees will disappear when the supply reaches 21 million. When the number of Bitcoins in circulation reaches 21 million, it is likely that mining fees will disappear. This limit has been set by Satoshi Nakamoto, the founder of the cryptocurrency. It is a measure to protect the price of the digital currency from inflation, as well as preserve its value over the long term. According to data analytics firm Chainalysis, there are a total of about 15 million coins in circulation, which is less than half the total amount of Bitcoins that will ever be mined. In a panel discussion hosted by Cointelegraph, some of the top mining experts discussed how the network would operate when the limit was reached. The supply of Bitcoins is limited to 21 million, and the block reward that miners receive for validating blocks is also limited. As the limit approaches, the block reward decreases over time. One of the most important factors affecting the future of the network is transaction fees. Transaction fees will increase with network activity. These will act as an incentive for miners and will help maintain the long-term health of the network. Mining is currently profitable. At the present time, miners earn around 60 to 100 BTC in transaction fees every day. This amount is equal to about $2 to $4 million in revenue. However, when the mining cap reaches 21 million, the rate of new block rewards will decrease, and it will become increasingly difficult to mine the coins that are minted. After the last 21 million Bitcoins have been mined, all that is left are transaction fees. There are several factors that have allowed miners to continue mining profitably. Miners can earn income from transaction processing fees, as well as the block rewards. If the network is not secured, there is no point in mining. And even if all of the miners in the world could be trusted, the security of the network would remain a concern. Ultimately, the number of Bitcoins that can be mined is finite, and the only way to create new ones is through the block reward algorithm. The rewards are based on the original code written by Satoshi. Core Scientific provides data center space and related services to run Bitcoin mining machines. Core Scientific is one of the biggest providers of data center space and related services to run Bitcoin mining machines. It provides facilities to host these machines and a fleet management software to monitor them. The company also sells its own proprietary digital asset mining management software. The company has 2 data centers in North Carolina, a facility in Georgia, and 3 in Kentucky. Each of these data centers is capable of hosting up to 400 megawatts of power. This capacity is split into 9.5 EH/s for hosting and 13 EH/s for self-mining. Core Scientific is the largest publicly traded crypto mining company in the US, producing 1,200 Bitcoin each month. However, it has been impacted by the drop in the price of Bitcoin. In addition to the recent loss in value, it is also experiencing increased electricity costs. As a result of the rising cost of energy, Core Scientific's gross margin is only 30%. That is a big reason why the company is going through a period of financial hardship. At the same time, the company has a large amount of debt. For the third quarter, the company had a $434 million loss. In October, it warned that it may file for bankruptcy. Since then, its stock has plunged 80%. In addition, Core Scientific's debt-to-equity ratio has shot up to 0.58. If the company can't pay off its liabilities, it could lose control of its machines. On the plus side, the company is attempting to restructure its operations. In order to achieve this, it will cut its contract with Celsius Mining. Currently, Core Scientific is hosting more than 37,000 rigs. But, on January 3rd, it will stop hosting these machines. Moreover, Core Scientific has plans to build a 300-megawatt blockchain data center in Denton, Texas. According to the company, this new facility will be 100% carbon neutral. In addition, Core Scientific will also lease land to the city of Denton for 7 years. This will allow the company to double the power it consumes from the local municipal electric utility. A special purpose acquisition company will be formed for this purpose. A new Bitcoin mining project uses 50 kilowatts of stranded energy to test out as a new Bitcoin mining site. If you've ever looked at the energy footprint of Bitcoin, you've likely heard of stranded energy. Stranded energy is energy that is uneconomic to transport and that is wasted. For example, flare gas producers waste energy by venting gas into the atmosphere. A new Bitcoin mining project is testing a new use of stranded energy as a new source for Bitcoin mining. The energy needed for this project is 50 kilowatts of stranded energy. Despite its high electricity costs, the Bitcoin mining industry is taking notice of greener energy solutions. This has prompted many mining industry organizations to launch initiatives to reduce their carbon footprint. Several have also targeted zero carbon emissions. In addition, many are pursuing goals to achieve sustainability with equity. According to the International Energy Agency, there are over 2 billion people worldwide who lack access to reliable power. To meet the global temperature rise of 1.5 degrees Celsius, the world needs to cut its carbon output by 50% by 2030. It's also important to consider that 80% of the energy used worldwide is produced close to the end user. While there is no doubt that the global carbon footprint of Bitcoin is growing, it's likely that the mix of the energy it uses is less dependent on carbon every year. Some of this depends on the utility of the Bitcoin network. Currently, the energy consumption of the mining industry is about 110 terawatt-hours a year. This is equivalent to the energy demand of Sweden, Hungary, Peru, and Malaysia. Mining also creates a carbon footprint comparable to the energy output of the entire country of Argentina. Since the amount of energy it consumes is so significant, it's easy to see why some people assume that the cryptocurrency will overtake the energy grid. However, most of the miners are operating with renewable energy sources. And 57% of all American miners are using sustainable power sources. The future of the Bitcoin mining industry could be more positive if greener energy solutions were implemented. These would help secure the decentralized network, increase the profitability of mining companies, and benefit the environment.